Hi, I'm Josh Brown. This week, Bernie Sanders, who is one of the Democratic Party's candidates for president in 2020, came out with a plan to eliminate all existing student debt. It's about $1.6 trillion. He'd like to wipe it out. This comes on top of what Elizabeth Warren is talking about doing, which is assisting with some of that student debt and wiping out some of it. Bernie's plan is a little bit more ambitious. He's talking about the need to raise $2.2 trillion in new federal revenue. In addition to wiping out all existing student debt, he wants to make state colleges free. And it's a laudable goal. And obviously, to a great degree, people in their 20s and 30s who are trying to start their lives, trying to form households, get married, have kids, they are waiting longer to do that. Whether or not that's because of student debt or the two are correlated, but there's no causation, people will argue about that till the cows come home. I do think it would unleash a great degree of economic enthusiasm amongst people who have been more reluctant to spend because this debt is hanging around them like a noose around their neck. I totally get that. In the United States, there are 45 million people who currently have an outstanding student loan balance. So out of 350 million people, do the math, that's a huge chunk of the population. Of the 2018 college students, 69% of them used some amount of student debt. And here are the numbers. The average amount of student debt right now is about $38,000. The median is something between $10,000 and $25,000. I've seen competing data sets on that, so let's just say it's somewhere in the middle. And then the horror stories that you hear about the people with over $100,000 in student debt, that is not as prevalent as maybe you might think it is, based on what you see in the media. It's less than 2% of current or previous college students have been saddled with $100,000 or more. Those are very rare cases, and we shouldn't even consider those when we talk about whether or not this will be good or bad. My personal take is that no matter what, if a Democrat takes the White House in 2020, whether it's Warren or Biden or Bernie Sanders, there is going to be some form of relief, if not an outright wipeout of student debt. It's unstoppable. There are more millennials alive right now than there are boomers. They are increasingly voting, and this is something that I think both Sanders and Warren have realized has struck a huge chord with the portion of the electorate that they need to get out. So they will get out on this issue, and that's why you're going to hear a lot more of it. The part about it that's going to be the most controversial for Wall Street is Bernie's idea of taxing stock and bond transactions. So his proposal, Senator Elizabeth Warren wants to do a wealth tax, which would apply to households that have more than $50 million. I actually think that'll be very popular, and she won't face much trouble with that issue. Most people not only do not have more than $50 million, but they don't even see any avenue by which that might even happen, even if they win the lottery. So I think that will be part of the solution, some sort of wealth tax, not an income tax, but how much assets does the family have, and they'll appraise things like real estate, et cetera, and try to come up with that. I don't know if that'll be the number, but I could see that. Bernie Sanders wants to tax transactions on the street. So I was thinking about what this might do to markets, and the knee-jerk reaction is, it's going to crush trading activity, it's going to halt all liquidity in the market, and it's going to be a disaster. And that might be true. I don't want to dismiss it because I haven't really thought that far into it, and anything can happen. But I think it's important to point out a couple of things. The first is we already had a financial transactions tax that was eliminated in 1966, but prior to then, there was this tax on buying and selling of securities. Number two, we've already got this mega trend in place with money moving from active strategies to passive. This potentially could send that trend into overdrive. If all of a sudden every single buy and sell of a bond or a stock is going to cost something, so in the case of a stock, they're saying 0.5% or 50 basis points. If you're going to start taking 50 cents out of every $100 worth of stock traded, yeah, you're going to halt a lot of activity. Maybe not a ton at first, but it's going to change the dynamics of the market. So right now, people are increasingly becoming passive investors. Even when they buy these life cycle or target date funds, they're typically made up of passive strategies underneath because that's how they keep it cheap. You're going to see way more of that. The second thing, though, that's really interesting is what does that do to Vanguard's business model? What does that do to iShares' business model? So the end user, you buy an ETF, you might pay the transaction tax on that purchase, and then you're not selling, or like if it's going to stop you from selling. But Vanguard's got to do all the individual stock trades in order to make the basket that gives you that ETF, the amount of shares that you bought. And it's going to cost them way more than it's going to cost you. And at 3 basis points for an index fund, I don't know if that will be sustainable much longer. So does the mutual fund pay the tax? Do you, the end holder, get hit with that? Does Vanguard eat some of it so they don't have to raise their basis point fee? These are all open questions, but I think they're the important questions if we think that some version of this has the potential for ultimately passing. So does this make you more likely to index? Probably. Does this make you less likely to be a frequent or active trader? Maybe, probably. Does this hurt the business model of ETF companies and index fund companies that basically have been the only game in town because now their internal transaction costs go up to a great degree? I think that's an issue that almost nobody is thinking about. So I think we can all agree it would be nice if 45 million people around the country did not have $1.6 trillion hanging around their necks and could instead use that money on something other than debt service. I think we all agree. But how you get there, it's not magic. It's not, you can't wave a magic wand to get there. Someone's going to pay for it. And the real issue that I think is really interesting at the end of the day is magically, let's say Bernie Sanders manages to get this to pass through Congress and it actually becomes a thing. Maybe it's great for the people who it affects in the short term, but in the intermediate term, if it causes chaos on Wall Street and stock values decline, and then all of a sudden we get into a recession because the stock market absolutely drives the economy these days, then it's like, well, who did we really help? Because the layoffs will start, and then we'll go through that whole cycle with no wage growth, et cetera. So it might be a very short-term solution with a disastrous intermediate to long-term consequence. And look, if you're 80 years old, maybe you're not so worried about what happens 5 or 10 years down the road. But I think we all have to consider these issues before we say, before we make this declaration, this is good, no, this is terrible. I'm not sure. I'm not 100% sure. But I think those are the important questions. Let me know what you think. Feel free to chime in below.